Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 1:45 PM on Sunday the 28th of February 2021 and a very brief update coming to you now for TLT. Now I only put a video out on this last week, so don't expect to see another one anytime soon, as I have a whole list of assets I need to cover between now and the next time I get to do this one. But I felt it important enough to give a little update purely because we had a very bullish bounce after a significant flush down last week, and we seem to have found some at least temporary support in the bond market. We may still move lower, but we found some support in the short term. Okay, so before we begin, if you're new to the channel, let's just give you a quick rundown of the chart here. We have our Elliott wave count on the chart, which is all the numbers and letters. We have 4 wavy lines on the chart, which are exponential moving averages. The yellow is 10, 20 in blue, 60 in orange, and 250 in green. We have a volume profile on the right hand side. This is a visible range and therefore adjusts when we adjust the chart. It has a built-in point of control here, which is a yellow dashed line, which is essentially the greatest area of volume in that profile. We have a MACD set with a 10 for the short-term moving average, 20 for the long, and a 9 to smooth. And we have an RSI set to a 10 close with the green 30 level representing oversold conditions and the red 70 level representing overbought. Right then. As we always do on this channel, we start with our basic technical analysis first and our Elliott wave analysis second. So let's get rid of our Elliott wave count and focus on what we can see. Right, so the big picture here on the weekly time frame, things look pretty dire and look pretty bearish. Now, but before we talk about that, let's just focus on this week's candle. This on its own, however, can be interpreted bullishly, at least in the short term. We have a long wick to the downside. This is like the opposite of a shooting star. It functions the same way as you see a shooting star at the top of a pattern. This is a shooting star at the bottom of a pattern. We've come down, opened for the week, raced down to a new low, and then shot all the way back up by the close of the week, right back at where we opened. The body of the candle is very small at the top, and a long wick to the downside shows having found significant support and a potential reversal candle. Potential. What you need to see here, though, to confirm this is another green candle, preferably engulfing the week prior to this candle. So we want to break the bottom or the top of this pivot, of this little candle here. From this pivot, we want to come up and break this high on the candle prior to it on the week of the 16th of February. So we want to see a nice green candle. Then we want to see that continue through all of these moving averages. So don't get your hopes up yet. It could be a sign of a reversal and going higher. This move could be complete. But let's have a look at what the other technicals are telling us now. We've got a 20 and 10 exponential moving average cross over the 60 exponential, which is the orange, which is now starting to trend down. All of this happening while the price is below. This is very, very bearish looking. This is what we traditionally call a death cross. Now, we have to go back to quite some time until we saw a similar kind of rollover from a high, where we see the 10 and the 20 rollover and go through the 60. So that upward trend has been intact since October 2018 essentially, and now it's broken. So that's pretty bearish looking, to be honest. We've also wicked through the 250 day. This in itself isn't that bearish. This is a rough area where we found support, but there's a lot of downward pressure here. A lot of downward pressure. Now we've got the MACD is telling us that we've just had huge waves of selling pressure here. Bearish pressure with the short-term moving average sustaining below the long-term average, accelerating away from it here again at the bottom and remaining below it. So a lot of bearish pressure still as well. We'd want to see this reverse and confirm an outside candle here confirming with the MACD that we're going to bounce. I think a good probability of a bounce, at least in the short term, is almost guaranteed, I'd argue. But how high it takes us, that's another question. RSI is in deeply oversold territory, around 22, so very oversold. A bounce is due. Now, I did speak in a previous video on TLT about the low and the higher low situation on the RSI, and the low and higher low, and so on and so forth, and how that coincides with a low and lower low on the price action. So that's why we're going to now come down to the day time frame for a minute, and then we'll bring up our Elliott wave count in a moment. So as you can see, below the 10, 20, 60 and 200 having all crossed below the 250, sorry I said 200, I mean 250 exponential moving average with the price below. That's a death cross on the day time frame, very significant one. We are running out of bearish momentum here on the MACD, potentially strong bounce from extremely oversold conditions, reading a 12.70 on the RSI on the day time frame. Strong bounce out of oversold conditions back into the neutral territory, just touching the 40 to 60 zone. So yes, maybe a bounce to the upside is due. Maybe it's a major pivot, but maybe not. Right, so let's bring up our Elliott wave count and see how I've got this counted at the moment. Now, if you remember in the previous video, we're just going to go full screen for the moment. In the previous video, I spoke about wave C to A parity at 131.09. Well, we haven't made it there yet. Right, we did find that 250 for support, but we haven't made it there yet. Now, also significant support level, which I also need to bring up, is if we bring up our Fibonacci retracement here for the moment and go from bottom to top, you can see that we came straight into the yellow zone here between the 61.8 and the 65% retracement. So we were talking about a wave 1 into a wave 2, right? So that's the perfect place for a wave 2. So it could be one done, big deep 2 retracement, big demand for bonds coming back, interest rates about to drop again, and yields about to drop again, and push higher in bonds. But this is a very tricky situation at the moment because the bond market's been selling off and interest rates have been coming up while the stock market's been roaring higher. Okay, so is the reverse going to be true? If we see a sudden demand for safety, does that translate to a big crash in the stock market? But Tom, surely if there's a big big bid in the bonds, rates come back down and the stock market looks favourable again. Yeah, so you see, we're in a bit of a sticky situation. This is why I think we're not quite done. My personal count has us looking for A to C parity here at 1318, so a bit deeper. This brings us down to the 707, not a traditional area of support. So, bit tricky at the moment. The count I've got it as suggests that we've got one final move down. Okay, because let me try and explain. We often look, when we're looking for a wave 3, right, we often look for an acceleration to the downside. Now, we've been quite ponderous working our way down so far. We've got this 3, 4 and a minute time frame as a triangle, but then we get a 1, 2 here, then we get a real acceleration down to this collapse we saw in bond price over the last few weeks. This feels like a 3 to me. So I'm looking for a 4 now, which this bounce could be the start of. So we could do something like bump, bump, bump into a 4, something like that. That would be like a flat pattern. And then we get that final flush down in bond prices to find parity deeper down to complete our wave 2. This would have yields spike aggressively again further out into the year, perhaps towards May or June. Yields would spike again and put the stock market under even more pressure. Now, this does support my count in the stock market where I say we're selling off now, but we're going to rebound towards the highs and sell off later in the year. The inverse here could be true in the bond market where we're going to rally up for a short time now and then we're going to sell off in the summer. Okay, that would push interest rates up, and then we would see the bonds become more and more attractive as a safe haven. As price comes down, yields go up, stocks come under pressure, and there you go. So that's the way I'm counting it. This looks like an acceleration to me. This like a 1, 2, 3. Now you could say maybe it's capitulation. I think, yeah, it's preemptive capitulation. It's the third of the fifth of the C of the 2. So we're almost at the end of this move, but it's just probably enough to just rebound from now and then have one final 5-wave move down. Like so, looking for that parity. I could be wrong, this could be a pivot, so let's talk about how to confirm. That's nice and easy, really. If we want to be sure, and this is an impulse wave down and it's complete, we should be able to find 5 waves in here anyway. Now, you can force it, I guess. I find it, you could go 1, 2, 3, 4, 5 perhaps. It's a little tricky. I don't really like it myself, but let's just assume for the moment that maybe we've bottomed here and we're going higher. Well, this swing low high, swing low to swing high here, pivot at 149.98. Any move back above this level would invalidate this bearish countdown, so therefore we would be looking in that case to see 5 waves up out of here, right, invalidating this level at 149.98, and then a 3 wave move down to confirm a 1-2, and then Bob's your uncle, off you go into a wave 3 out of here. So that's the level you're going to look at. I personally feel that some more sideways consolidation, a short-term bounce, but there's so much pressure overhead pouring down onto the bond market at the moment that any big bounce has got to be huge and violent to get us out of here, and it's got to come up in a hurry to undo all of this, come down, find support, and then get moving. I have a feeling that we're not done yet. But it's just a feeling that we're going to come up into all of this, all these descending moving averages, all this pressure, fail to take out this high, and then come back down for one more low, completing 5 waves down in a 2 at parity A to C relationship in an ABC correction. That's what I suspect is happening, and that's it, guys. So yeah, little bounce, potentially a sustained bounce for a little while, maybe taking us higher, but perhaps not high enough to clear this level. If it does, we'll have to reconsider, then maybe we've bottomed. But in the meantime, I think a temporary bounce is on the cards. We've reached extremely oversold conditions. We're bound to come up in the short term, I think. But I think we've got one more move down to come. And that's my opinion, guys. Alright then, so that's it. If you're new to the channel and you like what you're seeing here, please subscribe. Smash the like. Let us know what you think in the comment section below if you want to. And feel free to share my videos. And I think that's probably it now, guys, for the week. So I've got 5 videos out to you over this weekend. So spoiled you a little bit, I think, really, and I will try and get back to you as soon as I can, but I've got a busy week ahead. So have a great week, all the best, take care, bye bye.